SP the ghost in the black phantom. Talking us versus y'all, it ain't a fair advantage. It's going just like I thought, happen like I planned it. Whole click going up, I know they can't stand this. This that Red Panda anthem. This that Red Panda anthem. This that Red Panda anthem. Whole click going up, I know they can't stand it.
Harsh truth. Where you are right now in your personal life, you have accepted and approved. We're almost in 2022. And I need everyone to realize that if you're over 30 years old, wherever you are financially, especially if you've been watching the show longer than a year, you are exactly where you want to be. And if you want to level up and you need my help, please put help me in chat. But what I want everyone to do is be extremely accountable for every action that you take. And I know some of you are always like, hey, man, I don't have your investing acumen. You don't need it because I give it to you all for free. I don't know when to get in. I'm telling you every episode when to get in. All you have to do is then execute. If I've made you money, please put yes in chat if you're new so you can have proof that this works. But people will take, let's say even if you make a minimum wage, because of the stress that the job causes, you would take all of your money and then turn around and give it to a store, retail outlet, drinks to overcome the sadness that you feel by being in that depressive environment every week. So as we are rounding out and going into the new year, I want us, because the new year does not start next year per se. The planning has to start this week and the execution has to begin next Monday to prepare for 2022. And some of you frequently ask me, hey man, what did you do to level up? What did you do to get good at the market? What did you do to get good at business? And my buddy Art used to tell me, if you're a good business person, you then will be a great investor. Stay in the house for half of a decade and master your craft. I see so many, and I'm not judging. This is for those who really want to be at an elite level in their career, livelihood, and truly want to have freedom. I'm not saying that it is the healthiest thing that you should do. But when I say, I see a lot of you going on vacation, spending, clubbing like crazy, buying bottles. You're trying to portray a lifestyle that you don't have. And because someone told you you should buy these trinkets to make people do business with you, it's not true. People will want to do business with you if you are the best at what you do. Name me the 20 watches that you've seen Jeff Bezos, Elon Musk, Bob Johnson back in the day, or Robert Kraft wear. You can't name them. You were not listening and following them because of the jewelry that they had. It was because of the level of acumen that they had actually in their business. Microsoft, my baby. I've been telling you, buy Microsoft. Buy Microsoft. So they are planning a $60 billion share buyback program, and they raise their dividend. So when I'm saying two index, the two technology companies I always recommend Apple and Microsoft. As a creator of the two index strategy, I created it, no one. This is my formula, not a community formula, my formula. It's the safest way to go, because not only does it have almost unlimited upside potential, it has a dividend and small drawdown. For those of you who don't know, drawdown is when the market drops, how much will it go down in terms of percentage? This is a very good sign. And once Apple and Microsoft announces their crypto initiative, Microsoft is going to Saturn. It's going to skip the whole moon and go right to Saturn. And I've told you all last year, I said December because for many reasons, that Kathy was going to be attacked, and all of a sudden, January, all these cryptos, and I'll touch on Shibu later, but all of these crypto and coins have taken off as an hedge for most firms to edge her out. So an ARKK, and there's a reason why I've always told you guys, Vanguard, go Google the impact that Vanguard has had on our market. So an ARKK, $1.97 billion have left her fund. Later tonight, at the end of the show, when we start going through prices, for those of you who are in it, I'll tell you if it's good. But there's a reason why I never switched from Vanguard to ARK as a primary investment vehicle. Write this down. The number one decision that you have to make when investing in anything is how big will the losses or drawdown be. And I told you guys last year this will happen. For those of you who didn't listen, I'm sorry. The labor force participation rate is its lowest since 1977. And I'll say this, for all of my employers, we're entering a different era. Because of COVID, people have had a realization that most of us entrepreneurs have had, that time with our friends, family, loved ones means more than anything. How about you make an ecosystem so attractive that people don't want to leave? So how about when you promise them, these are the KPIs that you need to hit in order to get a promotion, you actually promote them when they hit those fucking KPIs? How about a 3-day work week? How about less meetings? How about integration of virtual assistants and AI technology to help your workforce do better? I know it's an investment, but when people are choosing not to work and they would rather stay at home because they don't want to get mistreated, there's an adjustment that needs to be made. The companies that are not only the sharpest in terms of technology, that have the greatest unique selling proposition to the world, the one that has close to a monopoly on its technology or innovation side, and the companies that are the kindest in this era are going to win. The era of treating your employees like shit while telling them that they're family to get them to work more hours for free. And then as soon as they want to take a couple days off for mental health reasons, or because they're exhausted, or because they have something that happened in their family, you won't let them. That era is over. The Fed chair has officially said, hey, Bitcoin isn't going to go anywhere. I've seen some people ask me, hey, what do you think about Bitcoin going to zero? Now, I did say that Bitcoin was going to go to 28,000. We'll talk about that later. I did say in 13 months that Bitcoin will go to 20,000. Bitcoin will not go to zero. The only way it will is if 99% of institutions pull out almost at the same time, while most retail investors are exiting as well. There won't be a run on a bank proverbially for Bitcoin, so there's nothing to worry about. So here's the median net worth. Please type in chat. We talked about it on a previous episode. How much money do you need to actually retire? And this is the median net worth by age. I thought this was really fascinating. So for those of you that are, let's say, in your 50s, a benchmark that you want to be at with everything included, house, 401k, any assets, any other securities, is 171,000. This is the median net worth. And of course, a couple weeks ago when I talked about the levels of net worth, people were triggered. But if you're 18 to 24, you want to have $8,200. 25 to 29, you want to have 7,500 roughly. 30 to 34, you want to have 35,000. If you're 35 to 39, you want to have roughly 55,000 in net worth. If not, you are behind. So this is why I stress continue to invest every single month, because this is just the middle of the road. And we can honestly state that the middle class is continuing to erode every week. And as long as the value of the dollar continues to drop, you're going to need to invest more. That's the only thing that's going to save you into your retirement. We talked about it before, but if you guys want an edge in the market, wellwisdom.com is the place to go. This is not an ad. It's just a site that I love to use if I need some information on a company or to look at what institutions are doing. Disclaimer, please do not copy, remix, or reproduce any of my material without written permission, or legal action will be taken. I love you dearly. Please don't. Subscribe to YouTube. I'll be posting a lot more exclusive content, especially in 2022. And join redpanda.com for all updates about Red Panda and some exclusive information on how to make you better into the market. Join the Red Panda Crypto Club. So if you want the 5 safest cryptocurrencies, where to invest in, the 3 best prices of where to get in given by myself and the Dream Team. Shout out to the Dream Team. Love y'all. Additional entries from the Algorithm Athena. Private Telegram channel for Gym of the Week from me and the Dream Team. 3 bonuses are given every month. And some incredible fucking gains. Join the Crypto Club. Now, if you want to join the Stock Club members, please put fire in chat. I love y'all. If you guys want the 4 best stocks for your retirement, the best places to get into the market called out by me. Additional entries from the algorithm Athena, the best growth stocks to invest in, the 2 best places where to get into the market, and 28 bonus picks on the year. And the holy trinity of investing presentation that I did at InvestFest with the strategy of how to execute it, then join the stock club. I appreciate you guys so much. Join the Red Panda crypto pool. So if you're not in it, I'll send an email out to you tonight about how to join. And I'll say this, I love you guys dearly. If you joined my futures program last year, you are not able to make any programs, accountability groups, trading rooms, or trading groups around it. I love you dearly. My lawyer is watching closely, and he's told me to tell you guys, be mindful. So if you've ever joined a program of mine and you want to remix it, please don't, because I don't want to go down this path. But I'm just letting you know that you have been warned. Let's get Market Monday to number 1 on the charts. And I will give away 1,000 scholarships. So go like the podcast, of course, rate it 5 stars, share with 5 friends, and have them tune in every single week. I love you guys so much. And college athletes, Red Panda wants to sponsor you for this year and next. And shout out to some people I love. Jim Jones with Capo Coin. You guys support that brother. Shout out to my guy Marquell, Josh, and Bonawyn. So Bitcoin will not go to zero. I want to reiterate that again. It was an article published recently that said, hey, if we go into a recession, these are some of the companies that you should invest in. Once again, I want to stress, even during a recession, the 2-tech, 2-index strategy works best. Quiz time. If you have VOO, which is one, and VTI, which is another, how many stocks combined do you have in your portfolio by having those 2 indexes alone? But let's review these 20 really quick. So the first one is ADS, Alliance Data System. No. The high was 312. Is the direction of the stock up or down over the last 10 years? It's down. We don't want to touch that. It is no good. Let's look at AIG. AIG had an incredible bounce since 2020, but if you ever remember what happened in 2007, 2008, and the impact, it's not bad, but if I'm comparing it versus Apple, Microsoft, AMD, Tesla, Google, NVIDIA, Shopify, ISRG, Pool, is it better? Let's go look at Pool, P-O-O-L. For those of you that are in that industry, you know how big of a monster it is, and look at this growth. We want our stocks to continuously go up or go in the direction of the area we want our bank account to go. I want to see hockey stick growth in the stocks that I'm looking at. So AIG is not one that I would put in. ANTM, I actually like this one. APO, Apollo Management, yes, very good. Let's look at Burleson, B-U-R-L. No, I would not touch. If I'm going to do a retail company, I'm going to look at Target instead. Burlington is strong, but it's not better than Target, Walmart, Home Depot, or Lowe's. Let's look at CNC. No. In chat, really quick, tell me what this company does before you guys argue, well, I think it's good. Tell me, let's look and see in terms of mind share if people know what this company does. CLTV is a definite no. CTSH. Cognizant is okay, but there are a couple companies that are better. No. CommScope, hell no. I love you guys as a company, but the stock I don't love. Fitbit, I need to bring this is Fifth Third. I'm mark that. That's one of my mistakes I've made on Market Monday. Fifth Third, good. I like JP Morgan a little bit better. And if I'm going to go fintech, for sure, I'm going to look at Square in comparison. I like Fifth Third a hell of a lot better. Let's look at GM. I'll talk about this later. But yes, LIN. Yeah, I actually like this one. Talked about this one already. Lowe's. For those of you that are in construction and real estate, I do not know how you are not investing in Lowe's and Home Depot. I do not get it. Those are 2 of the safest ones in your industry. Madison Square Garden, no. The Knicks are trash, so is the stock. Sorry. Shout out to everybody on the Knicks. NCR is okay. New York Times, actually not bad, but if you need a cheaper stock that is on the rise, yes. I wouldn't make it one of my primary investments personally, but if you need a cheaper stock, yes. Oxy definitely would not touch, because you cannot be pro ESG, pro Tesla, pro GM, and be pro Oxy. They don't mix. PGRE, Paramount Group, no, let go. RTX, it's okay. Raytheon is okay. I know because of war considerations, you guys may consider it, but whenever you're comparing a stock, you can't just compare it against its class. You have to compare it against every company that could be better or that could surpass it. So Tesla's running up, of course, great. It should be back to its highs in second quarter of next year. If it's not going to outperform Apple, Microsoft, AMD, Google, you can't put it in your portfolio. So once again, scholarship time, right? So the simplest way to invest in the market is 2 indexes and 2 technology companies, top tier. So VOO, VTI. If you want some more growth, VUG or VGT. Write those down. VOO, VTI, VUG, or a VGT. Only 2. You can't do 3 tech, 3 index. Don't remix. 2 and 2. Apple and Microsoft. And until you can present me a better technology company than those 2 together, we won't replace them. Leave it as is. I love you. So GM revealed that the company will offer 30 all-electric model vehicles by the middle of this decade. So when I told you guys, the entire strategy of when you're looking at a space, a sector, you want to invest in the top 3 and ideally get into the top 2. So if Tesla is the preeminent leader in EV, who will be second? And I've said for a while now, GM has been doing great things. Ford, not so much. Even though the Bronco looks a little bit impressive, I can't lie about that. The management of Ford has not been as great as GM in comparison. So GM is going to have a stranglehold. And if, like we said last year, when we were talking about the election, if Biden pushes this initiative for the fleet of vehicles in the United States to be EV, he's probably going to do the deal with GM and not Tesla. Thoughts on Shibu? Normally I'll have a salacious take on this and be like, it's trash and it's going to fall in these amount of days. But the thing I will say that will help you the most, and you guys have to realize, like, if I'm attacking an asset class, it doesn't mean that I'm attacking you, because none of us own the asset. Like, I get so tired of us arguing about whether indexes are better versus this versus that. And it's like, you don't own enough of the asset to even argue about it. But the point I want to make is, if you want to make the most amount of money and you have a definitive thesis or idea about why you love an asset, the best thing you can do, especially for highly volatile stocks or currencies or coins, is to hold them for a 10-year period. If you do that, you can hit some pretty amazing home runs. And then maybe next week I'll show you guys, if you invested $1,000 in Bitcoin 10 years ago, what it would be now, and break that down versus a couple of different asset classes. But the best advice I can give you is to hold it for 10 years. Since Bitcoin has went to 28,000 and some change, like I called, shout out to Kristen, we hit 56K. So when we hit these ridiculously yearly lows, and a great homework assignment for you, write this down. Every single month over the last 10 years, there is a percentage drop that occurs in every currency, every asset class. Same with Bitcoin. You probably should write down what they are, and if we have a deep drop based on those percentages. So, like, let's say hypothetically, not saying this is true, but let's say Bitcoin tends to go down 22% in August on average over 10 years. You should set your entry at 22% from the high of that moment in August to be able to get into a great place into the market and then get some great gains out of the market. And the number one reason why investing is important, because look at this. In 1932, $20 would get you 482 gallons of gas. Now it will get you 7. And if you're driving like a Yukon Denali or, you know, any big SUV, you know, $20 isn't going to stretch very far for you. 675 dozen eggs in 1932. Now you only get 10. And then 2,700 first class stamps. Now it'll only get you 40, but most of you are sending your messages via text and DM. Over the last year, natural gas has shot up 141%. Heating oil has went up 120%. Gasoline has went up 93%. Coffee has went up 79%. And lumber has went up 24%. Remember when lumber was going crazy and people was like stockpiling it, and I told you, hey, this won't last forever. But look at this, silver and gold. Silver, negative 8%. Gold, negative 8%. Gold and silver are not the hedges that everyone thinks that they are. Same as the bond market. Unless you're much older, and even then I can argue that investing in indexes is a better way to go. But silver and gold are not a hedge that you should partake in if that's what you're truly looking for. Top performing assets of this year, Ethereum is up 383%, Bitcoin is up 90%, Nvidia is up 59%, Google, which we probably don't talk about enough, but it's up 57%, Microsoft is up 32%, and Twitter is up 13%, Tesla only 11%, but like I said, next year I think Tesla is going to take off. As of February 2020, Cardano is up 2,880%. And this is why I tell you guys, if there's something that you believe in, you have to hold it. Because the more you trade an asset that has a chance to go 5,000 or 6,000%, that time out of the market is going to cost you dearly. You do not want to miss out on those moments. Man, and this is why I love the S&P 500 and why it's a primary anchor and what you should be investing in. Listen, negative 1% happens every year on average. Negative 5% happens every 1 years on average. Negative 15% happens every 2.5 years. Negative 20% happens every 4 years on average, and negative 30% happens every 9 years. The growth, however, is so tremendous that when the market is dropping, like how it is now and last month, when I told you guys, hey, September is one of the months where the market bleeds down anyway. February, September, and October, write that down, is when the market has a tendency to drop. You should be elated. You shouldn't be fearful. So if you're investing in the overall market and you know these stats, it should take a lot of the fear out of the equation for you. And shout out to my guy Ty, who's here with me right now. But between Facebook, IG going down, Twitch's source code being put on the dark web, and Southwest canceling 1,800 flights, man, there's something tricky going on in the world, and I don't know what it is. It reminds me a lot of when COVID first started to have an effect on the world and everyone was not announcing what it was yet. Please keep your eyes open. And I know it's because, part of it is because people are protesting if they have to get the COVID shot. I get that. But when you have such a coordinated event or attack, there is something deeper at play. Please be aware. Please be wise. Please be patient. And I think last week I saw this on EYL's page, and people were talking about Tina Turner selling her catalog for $50 million, and it was a mistake. And I wanted to put this like for business reference. Like, we have to stop throwing around these numbers as if this is not a king's ransom in real life. So if you ever make $50 million in your career, which I hope all of you do, if you make $288,000 a year, you have to realize that is your salary for 173 years. And if you make $1.4 million a year, that is your income or your salary for 34 years in advance. But off of that 50, let's say, what's Tina Turner, 82, 84? Let's say, hypothetically, she puts all of the money into an index or safe ETF. She can make $5 million a year of interest from that alone. And we have to realize like less than 7,000 black people in history have had $50 million of net worth in their possession. And let's be honest, when's the last time you played Tina Turner on Spotify or Apple? Like, most people are quoting the domestic violence cake scene more than a song. So like, I know everyone wants a hot take and everybody's trying to make their own podcast in the comments, but man, 50 million is a lot of damn money, and congrats to the queen for settling a catalog for that much. I know some people like TV rights and all the back end. She could have got 100. She probably only, God willing, let's say she has 30 more years to live. She wants to enjoy her life. And if it is invested properly, there will be money on the back end for her. 50 million is a hell of a lot of money. Shout out to Dorian for sending me this. 1 year ago, the mobile payment platform Pix did not exist. Now, half of Brazil population uses it. And this is why I tell you guys, remember last year when I was like, go study the Russell 2000, go study the German DAX, go study the Nikkei, go study the Bovespa. There are other markets that matter that people are overlooking by not looking internationally. And I know some of you are gonna be like, well, you hate China. Yes, I don't think you should invest in Chinese stocks. But at this time. But there are other markets that there are going to be big players in. And you have to realize, and Dorian sent me this last night, and he's like, man, banks are dead. I don't think that they're dead yet. But for banks that don't have a competitive advantage, or for community banks that don't provide exceptional service and convenience, you guys are going to be in trouble. Because not only are you getting squeezed from the big banks that are there, fintech is crushing a lot of competition. Put yes in chat if you heard about Pix, and put PIX if it's the first time you have actually heard about it. And I was going to touch on this last week, but we kind of ran out of time. I want to give you an investment pyramid of a couple different asset classes. So, of course, index funds, they'll give you around 13% return per year. Then you have technology stocks. So you can get anywhere from 30 to 45% return in a year if you have great entries. And I think on some days, I probably have some of the best on the planet. With Bitcoin, on average, over the last 7 years, you can get 69% return. So these initial three are deemed as safe havens. Everyone put safe haven in chat. Then, now you have some more riskier assets where you could potentially have higher upside. And if you've done the work here and all the homework on Market Mondays, and if you want to be rich, go watch every episode and take notes. Because what if this entire time I was teaching you how to be an investor in all asset classes by first starting you in a publicly traded market? Maybe, maybe not, but maybe. Angel investing. For less than half of the population, you can squeeze out 250% returns or more. It's not likely unless you have a competitive advantage or you're able to do something to help move that business and help them scale, right? Now, fifth, you have venture capital. You get 12% return on average if you look at all deals in aggregate. But let's look at these stats. 50% of venture funds return less than 1x. Only 5% return more than 3x. And only 1% of venture firms get returns up to 10x. Which is the most popular VC firm of all time? Please put it in chat. With private equity, you can get anywhere from, you're probably going to get anywhere from 10 to 12% ROI over a 20-year period. But if you can hit a home run, you can be in a 500% return to 800% return range. So when you learn how to invest in one thing, you then have a formula to invest in a bunch of other things. And I'm not saying that angel investment is easy, ventures is easy, but I do want you guys to be well versed in a bunch of areas because there will be a lot of opportunities that come your way here pretty soon. So I wanted to put that out there. And I know some of you were triggered about the wealth level, so let me tell you with love, I'm not here to re-trigger you this evening. But look at these stats. The United States of America, there's 17 million millionaires in this country. And most of them follow the same 5 or 6 paths to get there. Do you not deserve to be one of them in the future? Put yes or no in chat. There are 56.1 million millionaires in the world. There's 56 million millionaires in the world. And there's anywhere from a 6.4 to 22.3% chance of becoming a millionaire, depending on what path and industry you are a part of. But this is the one that really caught me off guard. There's 214,000 people in the world that have a net worth above 25 million. So while we're arguing on if these levels are accurate or not, 17 million people in the United States of America have a net worth of at least $1 million, 56 million millionaires in the world, and 214,000 people have a net worth above 25 million. My job is to make you think higher, think bigger, reach for more. Know that you're worthy. Know that you're loved. Know that your family deserves this. Your friends deserve this, even if you think currently that you don't. The investing blueprint that I need you to follow. Number one, I've covered it before, but we got to study the macroeconomic environment first. Basically, are things in the world good or bad? Bad presents opportunity. Please put that in chat. A bad economic environment, if I can talk, presents immense opportunity. Number two, then the fundamentals of the company. Then you have to study what the biggest macroeconomic buyers are buying. Vanguard, BlackRock. Understand what they are buying. And in 20 years, it may be another player. Study them because they are the market makers. And number four, you then have to understand the price of where to get in. If you master these four things, you will be able to invest very easily into the market and have a lot of safety in doing so. Quiz time. How long do immortal jellyfish live? So when you go back and watch previous Market Mondays, there's a common theme that you see in these. There's a lot of pictures of nature, a lot of pictures of aquatic life, and a lot of pictures of space. There is a reason why. Someone put the clues together, and the first one that does, I'll be sure to give you an amazing prize. But maybe the secret to living for a long period of time, as Jeff Bezos is trying to do, maybe that secret is in species that do not die. I'll touch more on that in 4 or 5 weeks. You need 10,000 shares for freedom. And then you need 100,000 shares for everlasting wealth. So if you find a company that has good prospects, or let's say you get into a coin really cheap and you have the chutzpah to be able to hold it for a 20-year period, 15-year period, the more coins or the more shares you can have, the better. And I'm not here to bust anyone's balls or make anyone feel uncomfortable, but the levels that you need to get to first is get your first share under your belt. Then you need to get to 100. Then you need to get to 1,000. Then you get to 10,000. So many people are trying to play on your emotions and say you don't need that much because they want to keep you in your ecosystem to keep you buying. I said it last week. My job is in 3 years for you to tune me out and say, bro, I don't even need you anymore. I have 26,000 shares of Apple. What the hell I need to listen to you for? I've done my job then. Most people are just trying to keep you contained so you can keep buying. Please put 100,000 shares in chat if you want everlasting wealth. And I was doing some research this weekend. So I said, okay, I know over 20 years, over no period, is the S&P 500 going to be down. If you love your kids dearly, if you love your grandkids, listen. The 40-year average of investing in S&P 500 is 262% return on investment. Go look at any 40-year period. You'll be up. And this is conservative. This does not include NASDAQ, right? This does not include tech alone. This is just investing in the S&P 500, a boring category, but a boring category that presents and produces results. S&P is like Kawhi. Like, it's not that flashy, but it's going to get the job done. And you don't really have to worry day in, day out if the S&P 500 is going to perform. And I want to be on the record for this. I was doing some studying, and I'm sure Button would be happy about this because maybe Spotify will go out of business, right? Just joking. Spotify, shout out to GR. Please call us. CNN, call us. But streaming for music will hit its peak popularity in between 2027 and 2029 and will start a very slow decline. I know it sounds controversial, but if you study the history of music and the media that is used, there is a life cycle, and this is why it's important to study Fibonacci cycles, Benner cycles, and then this crystal ball is glowing. Every media has a cycle, a life cycle, that when it goes through an advanced acceleration, it hits a peak point and then slowly begins to decline. So when you're studying the market, you then can see the data in a clean way. And I know people are thinking like, hey, I don't think that's possible. But for a couple of reasons, if you look at what the history of what happened with LimeWire, Kazaa, Napster, and how that affected. And then, of course, since that took over the music industry, they then had to play ball, which, I mean, I love Steve dearly. Like, last week was the 10-year passing of, 10-year anniversary of his death. But Steve Jobs single-handedly destroyed the music industry. And there's going to be another wave where streaming is going to get so saturated, which it is now, around 27 to 29, you're going to see that the music industry is going to go through an upheaval and quiet takeover once again. So keep your eyes out there for all my musicians that are out there. These are the safest stocks to invest in. Google. I know I don't touch on it enough, but I've said it on the show probably 15 times. Google's performance historically and the last year has been incredible. So if we look here since 2020, which I mean, it was 1181, look at the growth of Google since then. And then, of course, when you're thinking from the perspective of search engine and advertising, is Bing better? Like, you guys aren't using any other. I mean, even for privacy reasons, you can argue maybe DuckDuckGo has an advantage there. But at scale, when you ask people what's the predominant search engine, people are always going to say Google. And it goes back to that top of mind share. So when you ask a person about a category, who did they mention? Google is dominant there. But their run, I know the stock is pricey, but for the run that they've had, it is one of a kind. NVIDIA, Microsoft, Facebook, if you're already in it, if you have not been in it already, I would not add positions, but if you're in it already, you're safe. And then, of course, Amazon. And I've been touching on space for like the last 5 or 6 weeks. I don't know if you guys saw the article, but now Jeff Bezos is coming out of his, Jay-Z-like retirement, and now he's going to put a bunch of his effort into Blue Origin. And I was having a couple conversations with friends, and the space thing is a lot deeper. And I don't know everything about the space initiatives and traveling to outer space, and right. But the thing that I do know is from a perspective, I won't touch on that. Never mind. Let me go to the next one. Shopify is the eBay of this era, and Stripe is the new PayPal. Once again, I know you want me to cover what's really going to happen in space. No, I can't. Whenever my intuition tells me I shouldn't touch on something, I'm going to leave it alone. But there's a reason, like I said, that he is coming out of retirement to then put a lot of attention on Blue Origin. Be mindful of that. Shopify is the eBay of this era, and Stripe is the new PayPal. So these are two companies that I love dearly. And then where to get into the market. People ask me this all the time, and I want to add a couple of ways to get in. So first, you have the 200-day moving average, which is a classic way to get in. The second way, the 72-day moving average. And shout out Shiggy and Ian. I'm going to keep my promise to you. After Stock Club, I'm going to send you this link to be able to automatically have it on your charts. If you guys want me to drop a link to be able to automatically place it on your chart and Thinkorswim, please put yes. Number 3, the yearly open. So wherever the stock opened up at on the year, that could be a third place to get in. 4th, Fibonacci retracements. 5th, please write this down. Every company has a worst month of the year for a grade A stock. So Apple has a month historically where it performs worse. So does Google, so does NVIDIA, AMD, JP Morgan, Lowe's, McDonald's, Target, all have months where they perform. If you go look at what those are, and if you do a quick Google search in 10, 15 minutes, you'll have it. That's a 5th way you can get in. And then 6, which is the simplest, buy every single month. Like, if you're not putting in tens of thousands of dollars into the market at one time, hundreds of thousands or millions, trying to fight over a couple dollars difference won't mean anything in the long run. A lot of times when people want entries, that's because they're looking to trade it. So the act of actually investing in that asset every month is way more important than getting the sharpest entry, but not having a bunch of shares into it. So I want to give you that perspective. Risk to reward is more important than indicators. So once again, I've talked about this in the Holy Trinity, but if you, let's say you're risking $1 to make 11 or $100 to make 1,100, you can lose almost 90% of the time and still be profitable. Now, will your soul be hurt? Will your emotions be hurt? Yes. Do you want to lose that many investments? No. Do you want to lose that many trades? No. But you have to put the math in your favor to know. So, for example, if you are investing in, let's say, Apple at $200 and you're risking 1 to make 11, you then want to put your target at 2,200. So take the number in which you enter it, multiply that times 11, and that will give you an exit price for where you should be able to get out. I want to remind you, you cannot overtrade your way to freedom. 2022, I'm going to push this really hard. And for those of you know Holy Trinity, you know why I said 12, but I'm going to start telling you guys now, if you're not winning 90% of your trades, you should take one trade a week. Please put one trade a week in chat. Because most of you are over trading, over leveraging, and it's breaking your spirit. So I need to lead better in this regard to tell you, maximum, you should be now taking one trade per week only, unless you're winning 90% of your trades. And I want to leave you with this. This is the most important thing. Black men, it's really small, but it's really big to your child and their confidence. And I want you to go look up the studies based on how much time you spend with your child, how it affects their confidence, their ability to learn, and ability to connect with others. If you have a child or children, please teach them one thing a day. It doesn't have to be this dense-ass conversation as if you're talking to like Neil deGrasse Tyson or Milton Friedman back in the day. But teach them one simple thing per day. And this is most important. Number 2, hug your child for 1 minute straight when you do hug them. I notice when I do this with Xander, sometimes he'll say, "Get off of me." And when I posted this, some of you said, man, there's like a relief that kids feel when you embrace them for that long. And while we're talking about data and analyzing companies and going through these filings and 13K, like we need to put the same kind of metrics in place for the children we have or child that we have to make sure that they grow up and their hearts and emotions are filled with love, because the world will not give them that love or affection. So for the next month, I want you every single day to monitor and track if you hold and hug your kid for 1 minute, and in 30 days, I want you to see how they feel. That's going to have the biggest impact on your children. And I want to start to put together some KPIs around for black men, for black dads, and for dads all across the world. I love you guys. To help our kids be stronger and grow up in a safer, more loving environment in which we were grown. I love you guys. I hope you enjoyed it. Put fire in chat if you enjoyed it. These are the Master Lessons with the Master Investor. I'm here to give you the freedom that you want. I love you. Over and out.